So as you can see, we're at the highest high, and it's the second touch. First touch was when the market was being created back in what year? Oh no, back in 2003. So I couldn't take this as a second touch because it will be having an unrealistic trend and wouldn't be valid because this one would be out of would be out of line. So I took that one to make it as a second touch, and it was a record high ever since Nasdaq was created. Then we came to take the lows. The first low I recognized was this one. This was the second one. This was the third one. Then we went inside the picture. As you can see, we had where the channel started. It was a what? It was a demand zone that's been respected. That's when the channel started. And I also took when the channel started that demand zone, making it a confluence of a second touch of a trend line. This would be my first touch. My second touch, that second touch is a supply zone. And also I'm getting a W pattern, just giving me a bullish, a bullish sentiment. As you can see, it was an uptrend, but also causing pattern in the bigger picture. We broke previous highs, we retested previous highs, we went up, we came back to those previous highs. At this point, I was expecting market to continue pushing up if rates are not cut. It all depends on fundamental. If rates are cut, then risk markets are going to sell off. So if we're getting a rate cut in September, this is what I'm expecting. It's if we're getting a rate cut, my target is 80% of that pattern. And if we don't get the rate cut, we get rate hikes instead, or our rates are kept constant. This is what we're gonna get. In fact, this is what I'm expecting, not really what we're gonna get. The touch. We retest the fair value gap of that bearish movement. Then we come back to respect the previous supply zone, sorry. Because it was breaking. This was a resistance. We broke it. We came back. We'll take this as manipulation. Then we're gonna come back and re-respect it and make it a supply zone. Then we're gonna push up. Same thing here. We're gonna play around, break to cause a high to the pattern. Then come back again. And basically, this is what I'm expecting. And bear in mind, Nasdaq is a bullish market. Yeah, we might be having problems about IAs giving companies problems and all that stuff, but so far, to get where we are on the stock market is because of IAs, influence of IAs. And we must remember that this is a buying market, but it's also influenced by infinite fundamentals. So we should expect anything. I'm still on a bullish sentimental for now because I'm out of the sell trades. This was the first touch. The reason I'm saying I'm bullish, this is a daily time frame, weekly in fact. they can touch. And with that touch is currently spiking. We don't know what's gonna happen by the end of this week and how it will close. But I still believe on the bullish momentum that is gonna come in, whether for the next run or up until we get the announcement of the interest rates. Mini chart, it might be a bit clumsy, but since I know my charts, I don't really get confused. Some of you might get confused. No. This is where I took this. Let me just remove it first and remove some unnecessary objects. Okay, okay. Just hold on. Okay, guys, and I'm gonna run out of time. I just want to zoom out on the daily time frame just to get the market structure and set. If you can see, we had a pattern within the pattern. Let me take this out because it was spiked. So as you can see, first touch, second touch, third touch was spiking. You can see that the pairs are losing momentum and it's coming from a key zone. That key zone is 17,680. So now you will question where to enter and when. I'll take my Fibo. As you can see, this is currently demand zone. We are floating above demand zone. This was previous high. We broke that previous high. We retested. And we've never retested it ever since. But we came back to spike around that area. Not exactly at that area, but around that area. So make that area as a confluence. Use our trend line as our confluence. So basically those are two supply zones that's giving us a bullish signal. And as you can see, that area was spiked, our trend line was spiked. We even spiked our previous minor supply zone because if you can see on your left, we had this low and we're coming back to test that low. And by testing it, we're not coming with a high momentum. As you can see, bearish, but the pairs were losing momentum when testing this level. Hence, was anticipating buys from these levels. I'm just waiting for a confirmation. Market is still going to push down before going up. I'm just waiting for a pattern that's going to give me a bullish signal to enter, a bullish confirmation to enter. So I took from this supply zone. I made a fib using this first impulse, that bullish impulse. And if you can see on my fib, the 71%, I'm waiting for this daily candle to either close above as it was rejecting on this fib. If it's closed above as rejecting, then I'll know for sure it's time to enter for the bullish run. Because as you can see, between 71 and 61, that's where we had another supply zone. But that supply zone was what liquidated because it was never respected. Market just shot through that supply zone. And while shooting through, if someone who have long seen my analysis would have knew immediately it got here, it's time to buy. Let's go to 4 hours. So before I continue, I just want to show you the previous analysis I had. Hence, I was saying if we have rate cuts, this is what I'm expecting. If we have rate hikes or rates are kept constant at the level they are, of which they high already, this is what I'm expecting, a bullish run. You see, on a weekly perspective, this was what I was expecting. This was my analysis way before. And if we go weekly, it's exactly what happened. It got to that point. So I'm just expecting buys from now on. Guys, please stop writing on my whiteboard. Guys, please. I didn't allow anyone to write. I don't know who's writing now. Rich boy, please stop writing on my chart pen, please. So, as you can see, this is what I had. If rates are cut, we're getting rate cuts. This is what I'm expecting. Yeah, this was my previous analysis on this, and it did exactly the same. But only caught the first bearish run, couldn't catch the second one. I missed the second one, and I know a lot of people will be banging their chest on Instagram on NFP, but NFP was just the overall direction. Another thing I just want to share, guys. Nasdaq is not moved by NFP. Nasdaq is moved by CPI, PPI, and all those stuff, interest rates. Just to make a breakdown, in order for Nasdaq to go up, it's all jobs, CPI, which is Consumer Price Index. So if jobs are low, there will be low CPI. We should be expecting low CPI because when people they don't have jobs, they have less salaries. So when there's less salaries, obviously you're gonna spend less because there's not much jobs out there and there's not much money out there for you to have a job, and you never know when you might lose your job. So when the CPI index is low, it means consumers are not spending. If consumers are not spending on stocks, which means stocks will be losing value because they can't employ, they can't produce, and they can't overproduce. So with low CPI, with it produce low CPI, low jobs produce low CPI. Low CPI produces, low jobs produces low earnings. Low earning produces low CPI, causes low CPI. Then low CPI causes stocks to fall. When jobs are high, it produces high earnings. When high earnings causes CPI, consumer price spending, to be high. When consumer price spending is high, which means the stocks are going up because people are spending on stocks. And it also the interest rate affects the what you call they affect how people spend their money on stocks. Because if they're high, it means they don't have leverage to make more debt, meaning they're gonna spend less. If the interest rates are low, which means they have more leverage to make more debt because they won't be paying more interest. So they have more leverage to borrow more money from the banks. So yeah, I'm running out of time, guys. If people are still willing to make another session, we can host another session to finalize this Nasdaq setup. But I feel like from my side, it's already clear that I'm waiting for buys. The reason I'm saying I'm waiting for buys, as I said before, if we have a rate cut, I'll be targeting 80% of the pattern, which is on bearish. And on this one was a bearish pattern. We got the bearish movement. It has reached 90% of the pattern. So I'm not expecting market to keep falling any harder from here because on higher time frame, we're on supply zone. So what I should be expecting now, excuse me, is to just be getting a double top pattern that's gonna give me a reason to buy. Let me see. For example, this is what I'm expecting at this point. This is the level I'm willing to be preparing to, unless we get bad news that are gonna affect the stock in a negative way. Like was AI messing up again, or we're having rate cuts and whatsoever, or people losing their jobs with a certain company. Those are the only things that can make me focus on a bearish movement from now on. Otherwise, and if anyone has a question, they might ask something or add something.
Khona nembuzo.
Yes.
Does someone want to add something or does someone want to ask Sigo something?
And before moving on, another reason why I'm saying I'm expecting market to come back around this point is because this was a very bullish candle. So I'm expecting it on lower time frame to somehow have formed a fair value gap. As you can see on lower time frame, we have a double top. And that double top is a W pattern. So I'm just looking to reach this neckline. Once I reach this neckline, it gives me a proper possibly proper switch of the hour. So basically, I'm just waiting for around this level for a proper indication on the candlestick, on the characteristic on the candlestick that I'll be getting from the market before entering. Otherwise, if anyone has a question, they can ask or add something.
Please, guys, don't be afraid to buza umbuzo. Right? Ngithi vele la makukhona into ongayiboni kahle, cela ungasabi ukubuza.
I know my charts might get a bit clumsy when you go to lower time frame, but I focus on the main trend as on higher time frame. So by the time I reach 4 hour, I already know I'm focusing on a certain direction. So if no one has a question, I currently have like 5 minutes left. We can move next to US 30 or gold. This is US30. I've been trying to stay away from US30 because for me, it has not been giving me a clear picture as Nasdaq. So I decided to focus on Nasdaq as it was giving more of a proper picture on sales. US30 is currently doing something else. Like even myself right now, I'm lost what to do, whether to focus on sales or buys.
Mm.
Anyone who has their own opinion on US30 can add. Right now, I would say on real estate, I'm focusing on buys short term to make a retest, and I'm expecting that retest to be like, okay, let me just add this guy. That retest, like as you can see, one, two, three. So I'm expecting one, two, three. While forming that pattern, we'll be forming a squeezing triangle, continuing
Mm.
with the initial run. Something like this. Go form another shoulder. As you can see, we're gonna break, retest, form any shoulder, and come to the zone. Then from there, we'll see what will happen.
Mm.
So US30, I leave it like that. I'm staying away from US30 from my side. Because as you can see, I've deleted my initial analysis, but as you can see, according to how I plot my targets of my entries, it would have knocked me either way if I entered. Oh yeah. In gold, it's been a while since I touched on gold, but I can quickly review it in these 2 minutes I have. So basically, this is what I have in gold. It's just so much. Because I see you guys are not asking any questions, so we'll just move. So that's weekly, as you can see. First touch, second touch. And you must take note of the touches. Watch the market structure. Watch the market structure from the outside of the external side of the higher time frame and squeeze inside within the same higher time frame and try find another pattern or another structure within the same structure. For example, here we have a pattern within a pattern and they're complementing the same trend, which is bearish. On weak and outer external structure, we have the second touch from the upper trend line, which is a resistant, dynamic resistant trend line. We move into the inner structure of the market. As you can see, we still have the same thing, same pattern, first touch, second touch, third touch, fourth touch, fifth touch. As you can see, the more touches, the more exhaustion you keep on seeing around that level, basically, and we're also at current record highs. Recognizing that as a first touch, second touch. Yeah, as you can see, we're losing more momentum. Bullish, the, the bullish trend is losing momentum. So we should be expecting sales anytime. Rejecting candle. That is very It's a rejecting kernel that's giving us a lot of information. We still had a rejecting kernel. The bullish kernel couldn't break the previous